Everyone, today is Friday, November the 23rd. This is Anne Marie with the SPY Outlook for the day. Hopefully, those of you who celebrate Thanksgiving had a very nice one. I mentioned with the last video that we had a clear line of sellers sitting above us, and that line has not been broken. See the pink line right here, that is the 50 on the 4-hour chart. And this line here is the 200 on the 4-hour chart. This is the 50 on the daily chart. So if we take a look at this, what we can see is that we're trapped between two moving averages. When we're trapped between two moving averages, taking a trade in the center or in between any of these things is not a trade that is statistically likely to give you an edge. I didn't say statistically likely not to work. I said statistically likely not to give you an edge. And what we play here are probabilities. Why do we play probabilities? Because if we're playing against entities that are larger and usually more capitalized and usually with more information than us ourselves, we have to have an edge to play. And so for me, trading in between these levels, something I will not do. Now, I will try to look underneath at my technical indicators, and if we want to take let's take a look at this. We can see right here that the SMI has inflected and is moving downward. All right, now we can also see that right here in this custom indicator. We can see it bending over, and things are pretty close to being no longer in overbought territory. They're being flattened out. Now, as long as the SMI stays above this region, right, above zero, it means that there's positive momentum floating around in the stock. And of course, custom indicators are showing that as well. So everything mapping green for now. So it's likely to break out of the region. This morning we are up 1.5 points in the ES, and so we do expect that we continue to rise. As I mentioned, on days that have low volume, of which today also will be one because most folks stretch Thanksgiving into a 4-day weekend, what we do see is a likelihood of upside momentum because of the lower volume. Lower volume has a tendency to do that. All right, so what do? Wait to the break. Realize that the next step is up here at 140 and take the trade into the region. Just watch it. Remember, bottom line is you got to hold a trend to stay in a trend. So you look for higher highs and higher lows. If it breaks down, falls below the 200, you know that we've got this area here that is the base of this gap, if you're wondering why. Now it's already filled the gap, so it makes sort of this gap region a little bit unimportant, but there's a brand new gap here. So that's certainly something that we want to consider. Maybe it's better to shift this here. Yeah, I think I like it better there. Yeah, that works. So what that does is give us a little bit more driving room to the downside before we have any stopping points. Up here, we still have this elevator shaft and the gap above. Very uncertain formation overall. Still lower highs and lower lows. All right, so we could definitely come here and fail and still be right in the middle of a formation. All right, good luck trading today. If you don't have to trade, then don't, because today's not a day, especially trading the broad markets, today's not a day that's going to give you a good statistical edge. probability of being successful on a trending trade is extremely low, and so you'll have choppy, gappy movement. Why not just take the day to learn, right? Remember, it's not the trades that you make, it's the trades that you don't that keep you trading in the game longer. Good luck today.